Well, Bandhan Bank will be valued at close to 45,000 crores if it lists at its issue price of 375 crores and 375 per share, and that is more than any other PSU bank in the country except SBI. So you look at Bandhan Bank, it is asking for valuations closer to the likes of bigger private banks like a Yes Bank. Market cap would be much larger than even Bank of Baroda and even comparable banking peers like RBL, Federal or IDFC Bank for that matter. Now, if you go ahead or if you move ahead and if you look at the bank's financials, the loan book and the deposit base has actually the bank has been able to scale those up quite significantly in a period of less than 2 years. From about 12,000 crores, the loan and the deposit base has both nearly doubled to about 23 and 25,000 crores at the end of December. Now, how does that loan book size compare to some of its peer group companies? Well, Bandhan Bank's loan book is smaller than that of IDFC Bank or RBL Bank, but much larger than some of the NBFC turned small finance banks like AU Small Finance Bank or microfinance institution turned small finance bank like Equitas or Ujjivan Financial. Even if you compare the gross NPA number or the asset quality, that's much more superior as compared to its peers. So Bandhan Bank's gross NPA at the end of December stood at 1.67% as compared to some of the MFI turned banking entities like Ujjivan and Equitas, which were closer to 4 or 5%, and Bandhan Bank's number is closer to the well-performing retail-focused private banks like those of RBL at 1.56%. Even if you compare some of the other parameters, for example, the net interest margin for Bandhan Bank, which stood at 9.9% as of December, one of the highest in the industry. You look at the CASA ratio, the bank has been able to scale up and build a formidable liability franchise in a short span of time. So Bandhan Bank's CASA ratio stood at 33%, in line with what some of the other peers have been able to do, but what something like IDFC Bank has not been able to do. Remember, IDFC Bank and Bandhan Bank both received their universal banking license at around the same time from the RBI, but IDFC Bank's CASA still stands at just about 8.6%. You compare the cost to income ratio, again, that's another USP of this bank. They've been able to control their costs reasonably well. So their cost to income ratios is one of the lowest in the industry. Even the likes of HDFC Bank or IndusInd Bank would have a cost to income ratio in excess of 40–45%. So that's how it compares to some of its peers. You look at the margin return profile, that is also on the superior side. The bank had a ROA of 4.5% and ROE of 28%, and these are FY17 numbers. So post-issue, these return ratios for Bandhan Bank would come down, but analysts still believe it would remain in excess of 20%, and hence they would be much higher than what some of the other peers are doing. Now, let's talk about the valuations, and based on the asking valuation, let's see if Bandhan Bank, is probably more like a universal bank or is being classified as a small finance bank. Now, Bandhan Bank's 9-month FY18 based post-issue price-to-book ratio comes to 4.9. assuming it lists at the issue price of 375. Now, that's much higher than what a RBL or even IDFC Bank is trading at. It's also higher than some of the MFI turned small finance banks like Ujjivan and Equitas. On the other hand, the asking valuations are more closer to the likes of HDFC Bank and Kotak Mahindra Bank, although slightly lower than AU Small Finance Bank, which trades at 7 times price to book. So somewhere in the middle of their entire banking portfolio. Now, if you look at the possible listing scenarios, dealers are saying that it could list at a premium of about 35 to 40 per share. That means it could list somewhere around 410 to 415. Now, if we just assume that it lists at 400, it would mean implied market capitalization of 47,700 crores and a price to book ratio of 5.2. And if it were to list even more higher at a price of say 420, it would mean an implied market capitalization of 50,000 crores, and the price to book value ratio would turn out to be 5.5, which is a lot more expensive than the ratio at which HDFC Bank also trades. So definitely it would be a pricey IPO.